next guest comes in because he gives free financial advice. Well, not just to me, but to you as well. He's been doing a forecast every January for the last 36 years, even though he doesn't look that old. Paul Schatz with Heritage Capital. See, I just start to sucking up, and then that way you're going to give me some good tips. Yeah. Nice to see you. You've 36 years of doing this annual forecast. How do you put it together?
Well, I didn't have these gray hairs when I started it.
Oh, you think?
And there's 3 kids, too. Yeah. I started because I remember vividly believing that the Wall Street strategists are always wrong. Uh-huh. So my base case was figure out what they're saying and then don't do that, do something else.
Okay, so
that's how it started.
All right, you talk about that flip-flopping, though, because you were telling me that in terms of this year, you thought, okay, maybe it was going to be a little bearish, but you flipped that yourself.
I did.
Yeah.
My base case coming into the year, I started thinking about it a couple of months early, and I said, we've had 3 great years in a row. Mm-hmm. Are we going to have a 4th? And I said the odds don't favor it. I started doing my homework. I said maybe we're -8 to +9. Uh-huh. And then I realized, well, after 3 straight years,
right,
8 out of 11 times you're up the 4th year.
Yeah.
And in the 90s, 95 to 99, you had 5 straight years up.
Yeah.
So.
Yeah, but then you had 99, and boy, did that correct things.
And listen, that may be coming, not 50%.
Okay.
But that may be coming. So I said, let's do more work. It's a year. Here's a crazy one, right? Uh-huh. I like the numbers. It's a year ending in 6. Years ending in 6 are usually up. I know people are like, that's crazy. Why? There's no rhyme or reason, and maybe it's just coincidence.
You're not superstitious.
I'm definitely not superstitious. Only with sports.
Okay, fair enough.
So look, the Fed cut rates at all-time highs. Markets are usually higher a year later by 14%.
Okay.
Year ending in 6, you're up. It's Trump's second term, right? Midterm election years are normally where you see big blow-ups.
Okay.
Except when it's the president's second term.
Right.
All these things, GDP's 4.3%, inflation's at a 5-year low. Give me low teens as my
All right,
forecast.
let's specify for a second, because if you do follow the market, you usually tend to jump. Is it AI? Is it quantum? Is it banks? Is it real estate? Why should we be chasing these fads?
I'm not a fad chaser.
Uh-huh.
I'm okay, as we talked about earlier, off camera. I'm a huge semiconductor investor, as are you.
Yes, I am.
And it's been a great run.
Right.
Except for owning NVIDIA for a long time and trading some of the ETFs, I've missed the boat because I'm not chasing the fads.
Right.
I will buy things on pullbacks, like I bought, Bitcoin, the ETF, a couple of weeks, months ago.
Like a minute ago when it was down.
85,000. Am I going to chase gold and silver? I absolutely will not. I think it's crazy for people to now have I owned gold and silver? Yes. But would I chase the hottest and latest? No.
Should you look for a significant dip and then think about it? I mean, are these still safe investments?
Because once you get the dip, the correction, the scare the bejesus out of people.
Right.
You get the weak-handed folks, the emotional folks leave that market.
Okay, so speaking of scaring the bejesus out of people, AI ramps up quickly, also sinks just as quickly sometimes. Should we be chasing it still?
Chasing, no. But look, the internet, that fad, the WWW, World Wide Web in the 90s, it had a whole bunch of quarters in the game of football, if you want to make it an analogy.
Right.
So along the way, there were these crazy pullbacks, 20 to 40%.
Yeah.
That's time to buy it. AI is different because you already have revenue. These are not eyeballs, and this is not pets.com.
This is the future.
These are real companies. But they're expensive on a, I don't want to be wonky, on a valuation basis. So if folks want to buy the AI stuff, there will be these peaks and troughs.
So wait for the troughs. Hold on for dear life. We got to go, but I just want to hear your thoughts on interest rates, okay? Because they likely are going to go down a little bit. Does that matter?
The Fed is cutting short-term interest rates at least 1 or 2 more times this year. However, huge however for folks, long-term rates, because our debt is approaching $39 trillion, and we have to refund almost 30% this year, long-term rates are not going down in lockstep with short-term rates. Folks need to be super careful on the mortgage end.
Right. All right.
Sorry.
By the way, that was a lot. By the way, you wrote these notes. This is the worst handwriting I've ever seen. I'm going to start calling you Dr.
Everybody
Schatz.
says that. I can't read it, and my office manager can't read it.
I'm glad that he knows what he's talking about. Paul Schatz, always a pleasure. Good stuff. We jammed as much as we could in 4 minutes of time. We're going to take a timeout. Still to come on the news at 8. A new champion has emerged in college football that Paul Schatz did not predict. The connections of Indiana's quarterback. He's got ties to New England. We'll talk.